Curt, great to see you. Really happy to have Curt Holcomb, Executive Vice President based in our Dallas office, to talk about what's happening in the data center world, specifically Texas. Curt, welcome.
Thank you, Jim. Always good to be with you.
Great. Well, Curt, you've been very active and leading the charge in Texas. What are you seeing from a data center standpoint in the market and the landscape?
Well, we look at Texas really as four different markets, and they're all different in their own right. But I think across the board, Jim, what we're seeing is a classic supply and demand imbalance. A year and a half, maybe 2 years ago, there was pretty much a healthy supply of vacant colocation space, both power and capacity. And we've seen that completely change over the last 9 months. It's been really a rush for enterprise users as well as the cloud and hyperscalers in taking down space. So that's probably been the biggest thing that we've seen. And that really, we can talk more specifically about each of the markets, but that's really been across the board. I would tell you the other thing we're seeing, and that really goes hand in hand with that, is we're starting to see colocation rates rise. And we're seeing that significantly. We've seen it from the depths of 3 years ago at its lowest point of increased maybe 20 to 30%.
That's been dramatic. And I know that you and I have both experienced that on things that we've been doing. And it seems like it's really rapid in terms of how quickly colo rates have risen in the Dallas and surrounding markets, correct?
Oh, that's correct. I mean, the Dallas market, or DFW, is really the engine, the data center engine in Texas. It's by far the biggest market. You can combine Houston, San Antonio, and Austin, and it still doesn't have nearly the inventory that Dallas does. And there's a lot of reasons for that. I would tell you that in Dallas, it's a huge, huge market. It's been very healthy for the last 15 years, really. And we're continuing to see everybody expand.
And what's fueling that growth, Curt? What are the components of that?
Yeah, so I would tell you that DFW has historically been an enterprise market. Up until about 24 months ago, we really didn't see a lot of leasing by the hyperscalers or the public cloud guys in DFW. So it was a classic enterprise market that plodded along with 40 to, really 35 to 45 megawatts of absorption for several years. And what we've seen over the last 24 to 30 months is the entry of hyperscalers and the public cloud guys. Specifically, we have Google, who's built one really large facility. They've broken ground on another. They've also done a couple of significant leases recently in the market. Facebook has a huge facility. I think it's one of their biggest they have in the US that they've built in North Fort Worth. And then beyond that, they've also taken down some really large colo leases in the last 24 months. Really, the only group within the public cloud providers that hasn't really leased space in a significant way in DFW is Microsoft. The AWS, they've just done 72 megawatts of leasing within the last 9 months here with colo providers. But Microsoft is really the odd group out. And that really kind of segues into one of the other markets, San Antonio. San Antonio is a market that is really dominated by cloud providers. And because there are two large federal government, US federal government data centers in that market, it's really a cloud and federal market. And the colo providers really have followed that into San Antonio.
Interesting. And then getting back into on the supply side, Curt, it seems that the colo providers are running out of space to lease. Is that correct in terms of and how are they dealing with that for the future?
Let's talk a little bit about Houston just real quick. It's a pretty sleepy market. It's on the coast in the hurricane zone. So most of the leasing historically there has been within companies that have to have facilities in Houston. And then you get to San Antonio and Austin, and it's a little bit different in that companies that are looking in other markets within the US sometimes will land in Austin and San Antonio. They also are fed by groups, enterprises in Houston and Dallas that are looking for backup facilities. So that is one of the reasons why we've seen some significant co-activity there. But the bottom line is the leasing and everything in all the markets, including DFW, San Antonio has zero vacancy. I mean, maybe a couple of hundred KW here and there. Austin is pretty much the same way. Houston has some vacancy, but not significant. And then you get to DFW, and DFW 3 years ago had a lot of supply. We've seen the market just completely flip. And today, there's about 25 megawatts that are still available. However, we have 4 and 5 companies competing for that space. All of that will be leased up, I would say, by the end of the third quarter. So, and what we're seeing groups that have buildings under construction and are going to deliver space in the DFW market in the third and fourth quarter of this year. It's all pre-leased. So we're to get in DFW, which is almost, it's 800 or 900 megawatts total. We're going to see a situation where we have basically 0 to 2 or 3% vacancy, all of that being small pockets of space through the end of this year. And we see with deliveries next year, we believe all of the deliveries that are coming online in 2024 are going to be pre-leased.
That's amazing. I mean, like, I don't think that's ever happened historically, right? In terms of
it really hasn't.
Yeah.
And so if we really enter or get to the middle of 2024 and everything's pre-leased and we basically have zero occupancy, I think you're going to have a lot of providers that are going to be kicking themselves that they weren't closing on land earlier this year to start to build with new inventory. We're going to have a true inventory shortage here if the providers don't pick up the pace on closing on land and starting new development.
Well, that was you led me right to the next question in terms of, I know you've been very active on the land as well. What's the latest there? Because it seems like it's the mad world dash to get wherever you can, right? Like,
right. You need to really, we talk about land, Jim, but really land is a component, but what we're really looking for is power capacity. And we're blessed, I think, in DFW in that we have a lot of generation capacity that's out there that can feed the grid. But really, it's come down to transmission infrastructure. So when we're looking in DFW, and we have some of the providers we're looking for, and I would tell you that land is hard to come by because this is a very healthy industrial market. And so a lot of it's tied up by developers, and it's fairly difficult to even buy land if you're a provider. But it's really about finding land that has access to what everybody's looking for, and that's hundreds of megawatts of power. And if you look at where everybody's looking, and this is another significant factor that's driving demand for land in DFW, everybody is looking in really a new region in DFW. It's a southern part of the metro area. And the reason for that is most of the northern part of Dallas and the suburbs, Richardson, Plano, et cetera, are within the Eastern District of the U.S. federal court system.
interesting.
That is the district where I call them patent trolls, have been filing lawsuits against all the technology companies. And so you have the big public cloud providers and other technology companies that do not want to have any facilities within the Eastern District. So where all of the data center development that's happened over the last 10 years, most of it has been within the Eastern District. They won't go there. So all the providers now are focused on the southern DFW area, which is a completely new area for data center development in our area.
And how has land prices appreciated with this and over the last year or so?
Well, if the DFW area is probably the top economic area in the U.S. and has been for the last 4 or 5 years. So forget about data centers, just think about land in general for industrial development. And over the last 5 years, we've seen land prices go up 4 to 5 times what they were 5 and 6 years ago. So that's really significant. The good news for DFW is we're coming off a pretty low price per square foot. There's some areas where you could buy land for $1 a square foot.
Okay.
And that land is now trading for $3 or $4 a square foot.
Mhm.
If you go into, there are some areas that have access to power, and what a lot of providers are finding is that there are some landowners that are data center savvy, and they realize that they're sitting on land that has the power infrastructure for data center development, and they're pricing their land accordingly. And so we're seeing pricing well above $10 a square foot. That 5 years ago was considered industrial land. It's almost a pricing phenomena like they saw in Phoenix, in some of the suburbs there, like Goodyear. You've seen land prices go way up.
And then with the land, Curt, tell us about the power metrics in terms of how's that landscape look?
In terms of pricing, power pricing. So the DFW area in most of Texas is deregulated. So it's a dynamic pricing market. San Antonio is not, for instance. It's a municipal owned utility, and so it's regulated, and their rates used to be subsidized by the city of San Antonio, which owns the utility. That's why a lot of the early data center development started. But those rates have gone from 3 cents a kilowatt hour in San Antonio to 7 or 8 cents a kilowatt hour. DFW, which is deregulated, has really fluctuated between 4 and 6.5 cents over the last 10 years. And the pricing in North Texas is affected by the price of natural gas. That's the primary mix, energy fuel mix for generation. And natural gas pricing has been higher. We're now starting to see it go down. I would tell you, we think that by the end of the year, pricing will be probably around 5 cents a kilowatt hour.
Interesting.
And that's a pretty attractive rate these days when you compare it to other markets.
No question. Well, Curt, this was excellent. Thank you for your insight. Really appreciate it. Great to kind of understand what you're seeing in Texas and across the board in terms of emerging technology. So thank you for your time, and we'll talk to you soon.
All right, Jim, I appreciate it.